Welcome to this case study on the journey from corporate professional to InsurTech startup founder, brought to you as part of the SkilledMBA case study series. This session explores the entrepreneurial journey of Vivian Le, co-founder and CEO of Saladin, Vietnam's first tech-enabled insurance brokerage. We'll examine how she identified a market gap, built a disruptive startup, and navigated challenges in an evolving InsurTech landscape. Vivian Le achieved remarkable milestones in the InsurTech space. As a first mover, she pioneered Vietnam's first tech-enabled insurance brokerage. Saladin has served over 300,000 customers in a traditionally low-trust market. Through operational excellence, the company has maintained a 95% claim success rate, setting a new industry benchmark. Vivian's transition from corporate executive to startup founder involved several key phases. She started in a traditional corporate setting before identifying inefficiencies in Vietnam's insurance sector. Taking the leap, she left corporate security to launch Saladin, positioning it as a disruptor in Southeast Asia's insurance industry. The success of Saladin depends on several key stakeholders. Vivian Le, as the founder and visionary, navigates rapid growth and industry shifts. The Saladin team drives innovation and ensures service quality. Vietnamese customers seek a transparent and digital-first insurance experience. Regulators and investors shape compliance requirements and scale opportunities. Saladin faces four major challenges as it scales. First, its strategic direction. What's the best move to sustain momentum? Second, regulatory constraints, navigating complex Southeast Asian insurance regulations. Third, technological limitations, addressing gaps in digital infrastructure in emerging markets. Finally, the competitive landscape, standing out in an increasingly crowded InsurTech market. Saladin has several key strengths. As a first mover, it established an early advantage in Vietnam's InsurTech space. Its tech-driven model focuses on a seamless, customer-centric digital experience. Additionally, its operational excellence is demonstrated by a 95% claim success rate, setting it apart from traditional insurers. Despite its strengths, Saladin faces challenges. Its heavy reliance on the Vietnamese market limits its growth potential. Digital infrastructure gaps pose operational hurdles. Additionally, leadership bottlenecks present challenges in distributing decision-making as the company scales. Saladin has several opportunities to expand its impact. Regional expansion into similar underpenetrated Southeast Asian markets could unlock significant growth. Product innovation, such as microinsurance and bundled services, could diversify offerings. Lastly, strategic partnerships with banks or health tech firms could broaden customer reach and revenue streams. However, external threats pose challenges. Competitive pressure is increasing as traditional insurers and global startups enter the market. Regulatory shifts could impact Saladin's business model. Lastly, rapid scaling may make it difficult to maintain company culture and service quality. Vivian Le's leadership highlights four critical concepts. Entrepreneurial leadership requires navigating ambiguity while driving strategic execution. Gender in tech presents unique challenges, as Vivian builds an inclusive culture in a male-dominated industry. Market entry strategy involves balancing timing and scalability. Lastly, aligning growth with operational readiness is crucial for sustainable expansion. One strategic option is expanding into Southeast Asian markets. This offers a first-mover edge and the potential to multiply Saladin's customer base and revenue. However, regulatory variations create complexity, and expansion requires significant investment in leadership and capital. A second approach focuses on product innovation. Introducing microinsurance and bundled services could double customer retention rates and tap into at least 3 new market segments. However, product development requires specialized talent and an estimated 18-month rollout timeline. A third strategy prioritizes internal resilience before scaling. This involves optimizing operational systems, strengthening team structures, and refining customer service processes. While this approach builds long-term stability, it may slow immediate revenue growth. To determine the best approach, Saladin must evaluate each option across 4 key criteria: ROI potential, how quickly will it generate returns; risk level, how complex are execution and regulation; talent needs, what expertise is required; timeline, how long until measurable impact. A phased approach is recommended for sustainable growth. First, consolidate leadership by strengthening internal systems and team structures in Vietnam. Next, pursue phased expansion into high-potential ASEAN markets after building a solid operational foundation. Third, drive data-driven product innovation by leveraging AI to co-create insurance products with customers. Finally, champion inclusion by building women-led innovation networks across Southeast Asia. Thank you for exploring the journey from corporate professional to InsurTech startup founder, brought to you as part of the SkilledMBA case study series. This case study highlights the complexities of scaling an InsurTech startup while maintaining innovation, leadership, and operational excellence.